Let's talk about how to check your business credit score. So if you're in business, whether you're a startup or whether you are an established business, it really helps to have a clear idea about how to check your business credit score. At least you want to know where you are at, right? For instance, what's your payday score? Is it 80, 75, 95, whatever? So here's an overview I want you to pay attention to. First of all, before we talk about checking your business credit score, it really makes sense to understand what a business credit score is and what a business credit report really is. So when you think about a business credit report, I want you to think about a picture of your business's credibility and creditworthiness at a specific point in time. So a business credit report includes your credit score, along with other insights into the financial health and creditworthiness of your business. It includes general information about your business, like number of employees and ownership, as well as details on credit accounts, payment history, collections, and public filings, among other things. So you can see that it's a really comprehensive. It really depends on how long the business has been in operation in the first place. And so when we talk about the business credit reports or business credit scores, there are some companies that have specialized in this in providing this service for the last few years or a few decades. So you have three main players when it comes to business credit report provision here. You have a DNB, Dun & Bradstreet, which is actually the top, and then you have Experian and Equifax. So those are the three main business credit bureaus that compile data on businesses. And TransUnion, for that matter, doesn't have a business department yet. And so when we talk about DNB, Experian, and Equifax, the information on their reports will typically be the same, although their collection and verification processes may be slightly different. I mean, every company is trying to differentiate itself, so that's really good. And so when you apply for a small business loan or seek out another form of business financing, the lender will typically use your credit reports to get your credit score and other information on your business. And and that can be as granular as everything, like everything about your business creditworthiness, your payment history, and so on and so forth. Boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. So when we analyze a business credit score, it's important to understand the factors that go into your business credit score in the first place. And those factors may actually vary depending upon the nature of your business, the sector you're in, and how long you've been in business, okay? So each credit bureau weighs different factors from your credit report when calculating your business credit score. But most look at a combination of the following. We are going to put this on the screen so it's a clear for everyone what we're talking about. First of all, the company's size and age. So how early when a company has been operating for 10 years, 15 years, 5 years, or 6 months, that really makes a big difference when it comes to the business credit score. Now, in terms of how much weight each credit bureau actually allocates to those criteria, it really depends. So the company's size and age, that's an important element. The age of your oldest financial accounts. This is another element that will play an important role in terms of determining your business credit score. So the age of your oldest financial accounts, we're talking about the age of your oldest debts, for instance, your business line of credit, your business loan, your equipment financing, your MCA, or what have you. Also, a business credit score will pay attention to the available revolving credit limits. So if you have a line of credit open or credit card, for instance, this calculation will take that into account. You also have established trade lines. So how long have you had those trade lines? And again, we are speaking about established. In other words, not the closed ones, but the ones that are open and active. And also your payment history to creditors and vendors as also plays an important role because it is a sign, if you will, of the financial viability of your business. Okay, the going concern of your business as the term goes. Another element that plays an important role in your business credit score is actually you have public records for liens, judgments, or bankruptcies. So if your business has been involved in something derogatory, this will affect negatively your business credit score. Boss, I want to quickly remind you of today's topic. We are having a conversation about how to check your business credit score. Now, let me talk to you about checking your business credit score. And I want to share with you the step-by-step you need to follow if you are trying to get it done vis-a-vis the various credit reporting agencies, because the strategy or the methods, if you will, are different from one credit bureau to another. Okay, so you can stay on top of your score and check the financial health of other businesses by pulling business credit reports from each of the main business credit bureaus. This is an important element to know about. And so lenders may use different bureaus. So it's kind of smart to check your business credit score with multiple agencies so that you can see if there are any problems, if there are any inconsistencies. You can address those inconsistencies before actually applying for a business loan. Okay, so I want to first start with Dun & Bradstreet. So when you think about Dun & Bradstreet, I want you to think about, the OG in this space, actually. And businesses don't automatically get a credit score from Dun & Bradstreet. You first need to have a DUNS number. So DUNS number is kind of important in terms of like being in the system, being in DNB system. So it's free to apply, but can take up to 30 days to receive. And what happens here is that once established, Dun & Bradstreet rates your business's financial health and assigns a paydex score, a delinquency score, and a failure score, along with several other ratings and predictors. They call those predictors, okay? And the paydex actually evaluates payment performance, and companies are scored between 0 and 100, with a higher score indicating better payment history. So this is kind of cool. And on average, you want to have 80, and 80, this is really seen as really good. So the delinquency score, 101 to 670, assesses the likelihood a business will pay late. So that's 91 plus days in the next 12 months. A higher score translates to a lower risk. So this is kind of important. And the failure score, previously referred to as the financial stress score, ranges from 1001 to 1875. And this is a criteria. This is a benchmark, if you will, that predicts whether a business will file bankruptcy or shut down without paying its debt within the next 12 months. And a low failure score equals a high risk. This is how you analyze this metric. Okay, you can check your paydex score and other 3 other ratings for free with Dun & Bradstreet's credit signal package, which really includes alerts for score changes and business credit inquiries. And upgraded subscriptions offer access to more ratings and deeper analysis, plus additional alerts and monitoring for $15 to $39 per month. Now you have Experian. So Experian is kind of cool because Experian's credit score report includes your business credit score, financial stability risk rating, payment trends, and account histories. So when we analyze Dun & Bradstreet, Experian, and Equifax, we love the granularity that Experian brings to the table here. And the business credit score, ranging from 1 to 100, looks at payment behavior, primarily on commercial accounts, including the number of delinquent accounts and the number of accounts with payment terms beyond net 30 days. So we are speaking here about commercial accounts in terms of business lines of credit, equipment financing, merchant cash advances, business term loans, and so on and so forth. You also have invoice factoring. Okay. And so the thing is that, so when I was talking to you about the fact that a business credit score from Experian looks at the number of delinquent accounts and the number of accounts with payment terms beyond net 30 days, a higher score equals a lower risk for delinquent payments. And so according to its website, Experian's financial stability risk rating 1 to 5 predicts the likelihood of payment default and or bankruptcy within the next 12 months using factors like commercial collection accounts, credit utilization, and business and industry risk factors. This is an important element to think about. A low score indicates low risk for serious financial stress. And you can purchase your credit score report through Experian's website for $39.95 per report, or subscribe to a Business Credit Advantage for $189 per year for unlimited access. And the cool thing is that you also have alerts, monitoring, and additional analysis. So it's one of those things where you have to see what really works for you. Now, Experian, unfortunately, or fortunately for that matter, doesn't offer a free business credit report, so you're going to have to pay for stuff. But it is really worth it anyway, though. So in terms of the stability, in terms of and if you are going for large business loan amounts, it's always a great idea to check your business credit score first, so you know what you have in advance, what the lender will look at anyway, right? So you want to go for your Dun & Bradstreet, your Experian, but also your Equifax sort of business credit scores. Also, I want to quickly remind you of today's topic. We are having a conversation about how to check your business credit score. Let me talk to you now about Equifax. So when we talk about Equifax, I want you to think about the fact that Equifax Business Credit Report also includes multiple scores. So you have credit risks, you have failure risk, and you have payment index. And those three are able to help you assess a business's credit worthiness, okay? So the credit risk score ranges from 101 to 992. And this evaluates the likelihood of business failure or delinquent payments, okay? And a higher score equals a lower risks, and payment index scores 1 to 100 evaluate payment history, with delinquent payments leading to a lower score. And the failure score, the failure risk, if you will, and it's called the failure risk score, 1000 to 180, 1880. This aims to predict the odds of a business shutting down operations in the next 12 months. And a lower score equals a higher risk of failure, really, when you think about it. So, long story short, as an owner, you can request your company's report at no cost, but there are a few caveats. First, you can only get your own credit reports if you are applying for a business credit, like a business line of credit or a business credit card. Second, you have to contact an Equifax representative and provide proof of a business credit application, so because they want to make sure that you are using the data for something valuable. And so you can contact Equifax to purchase a credit reports for a competitor, partner, or supplier. And unlike other business credit bureaus, Equifax does not publish pricing on its website. So you're going to have to call the company to talk to someone and, before knowing more. But the bottom line is with Equifax, you have credit utilization and summary of credit accounts. You have public records such as bankruptcy or tax lien. And you also have the credit risk score, business failure score, and payment index score. So that's really an important element to know exactly how to navigate the Experian or the Equifax sort of a credit score, business credit score. So let's talk about when we talk about checking your business credit score. That's one thing, right? That's a really important bit, but you have to also move on to a phase where you are building your business credit score continually. This is not just a one-time thing. This is not a sporadic thing. It has to be a continuous, okay? A low business credit score or no score at all can make it very difficult and more expensive to get business loans and payment agreements with suppliers. Because see, when we talk about business credit score, we're not just talking about banks and credit unions. We're also talking about your suppliers, your vendors, okay? And in some cases, there are some stakeholders who will now want to do business with you if you don't have a business credit score. And so that's important. And you have to learn to build business credit in several ways. And so if you want to build business credit, you have to first get an employer identification number. That's an important element. So everything starts around your EIN. And your EIN is very easy to actually get. You just have to go to the IRS website, and this will be very helpful for you in terms of getting the info you need to have, right? Applying takes about 10 to 15 minutes, and you get your EIN ASAP. And once you actually do this, you want to structure your business as an LLC, partnership, or corporation. instead of a sole proprietorship. Because if your goal is to build business credit score, you have to actually segregate your personal affairs from your business affairs, right? And that's kind of important because it really gives you the flexibility that you need actually to build your credit a lot faster, your business credit a lot faster. You also want to open a business bank account. So we're talking here about having a relationship with a bank or a credit union for that matter, so that you are able to know exactly what works and what doesn't work in your case. So when we talk about opening a business bank account, we are speaking about actually applying for credit at the same bank where you have an account. That way you are building a relationship on the right terms anyway, so that you can actually apply for a credit card at the same bank where you have your account. And later on, you can apply for a more extensive business funding, like, for instance, business line of credit or a business credit card or business loans. Or in some cases, if the bank offers that, you can try invoice factoring or merchant cash advances. So you have the possibility to try a lot of things to build your credit a lot faster. There are other ways to actually build your business credit score. I mean, this is not just stopping at opening a business bank account. You can actually try to establish trade lines with suppliers. I mean, I was talking to you a lot earlier about the suppliers asking for your EIN, because your EIN actually determines at least partially your business credit scores, because with your EIN, somebody can check your business credit score. So you want to establish trade lines with suppliers. I mean, that's called net 30 accounts. So that's what a trade line is with the suppliers. And that's kind of important. And you also, to build business credit, you want to work with creditors that report to the main business credit bureaus, right? Because the whole thing is, if you were to go with the lender, if the lender doesn't report to Equifax, Experian, or Dun & Bradstreet, then you're really wasting your time. Because if your goal is to build business credit, and the lender doesn't report your data to business credit bureaus, you're not going to make progress, right? So you want to. The thing is, when you first have a conversation with the lender, when you apply or when you inquire about the company's loans and lines of credit or what have you, you want to ask specifically if they report to the credit bureaus, so that you're not really surprised if somebody were to tell you, hey, listen, we're not reporting and blah blah blah. No, so you want to first ask them if they report. If they report to the credit bureaus, then it's good. Now, when we talk about credit bureaus, we're not just talking about all kinds of credit bureaus, right? Because there are other credit bureaus besides the three that I mentioned a little earlier. You also have the SBFA, for instance, and but the top three remains Dun & Bradstreet. You have Experian and you have Equifax, but you have SBFA and you have other credit bureaus. But the question is, do you really need to report in those credit bureaus? Not necessarily, because if your goal is to have a credit score at established credit rating agencies, then you want to stick to only the top three. Those top three should be really be enough for you, and so that's really good. So all the things that I give you: getting an EIN, structuring your business as an LLC, partnership or corporation, opening a business bank account, acquiring and using a business credit card, establishing trade lines with suppliers, working with creditors that report to the main business credit bureaus. All these things are kind of cool, but you also have to learn to make on-time payments, correct errors on your credit report, and manage your business debt in a way that is financially positive to your company's cash flow, right? That's what's going to help you maintain a solid business credit score in the long run. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about how to check your business credit score. I give you the overview, and now I'm doing the recap. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.